Joseph, turning to the local scene in Malta, what would you think would be the main consequences of AIFMD on the Malta fund sector? And what are the opportunities and threats that you see for Malta as a result of the implementation of this directive? And finally, would you conclude this is positive, negative, neutral?
Again, very, very difficult to see how it's going to pan out. With specific reference to Malta, I think Malta so far has built its hedge fund business primarily by attracting the smaller startup funds and the smaller managers. And the attraction, I think, to Malta hasn't just been price, although I think we are at a price advantage perhaps compared to Luxembourg and Dublin, but also in terms of speed of going to market, our regulator, accessibility, and also the level of service providers. I think that can be found in Malta, and I think that will remain. Now, what remains to be seen is how the whole AIFMD is going to pan out, and there could be sort of two extremes, and the possibility could perhaps be somewhere in between. I think one extreme, as I said, on the positive side, is that the AIFMD can create such a powerful product brand like UCITS that will attract more investors into European onshore jurisdiction because it is a well-regulated product stand. And also I think then Malta will stand to gain. On the negative doomsday side, I think we've already been seeing a certain amount of smaller funds closing down. I think hit by rising costs, difficulty perhaps to attract a certain amount of funds under management that might make it a bit more cost effective. So perhaps some of the larger managers might get bigger, and it's easier for them to handle such regulatory developments. For the smaller ones, it remains to be seen how they can go forward with all the regulation, because it's not only just AIFMD. In fact, again, I read in a recent FT article, I think that about 50% of the global hedge fund closures since January 2011 had less than 50 million of assets under management. So I think the larger firms are obviously capable of handling more, of the regulatory requirements. So it might be interesting and ironic, actually, that rules adopted or aimed at protecting the investors might end up limiting choice if there's going to be more fund closures. In my view, I think perhaps the middle ground might pan out. I think the regulation might split the industry. I think we're discussing this over coffee with Paul. I think Cayman will continue to serve very much certain elements of the US market, and it will continue to grow. Whereas managers might create EU onshore funds for the European investors. So a mirror image, one for EU investors and one for non-EU. And therefore Malta can gain from that, because people who want to start establishing therefore their onshore funds in a jurisdiction like Malta. I think there could also be rationalization within the market. I mean, an interesting statistic, for example, is that the US mutual fund market has just over 7,600 funds compared to 35,000 in Europe. And the average fund size therefore in the US is $1.6 billion, and in Europe it's 205. I mean, it could be because of all the different cultural differences in Europe compared to the US, but obviously the larger the fund size, it is easier then to manage in terms of costs and spreading the costs across that fund. I mean, in my opinion, to conclude, I think that the AIFMD is trying to create a level playing field in member states as far as regulatory framework is concerned. So I still think that it will allow fund sponsors to conduct jurisdiction arbitrage. It means to find out which location is best of choice. And I think the other considerations could be tax, for example, and Malta has certain tax advantages. There could be costs. Therefore, I still believe that on a positive element to the AIFMD, which will pan out, I still think that Malta has a role to play and eventually might be seen as a jurisdiction of choice or alternative jurisdiction on which to locate funds in Malta.